But let's also bring on board Ashi Anand, CIO at IME Strategies, joining in with us as well. Thank you so much, Ashi, for joining in with us this afternoon. And let's talk about two things. One is in terms of PSUs. Those have seen a rally. That's what I want to know. Do you think that rally in the PSU basket is going to continue? And anything that you are finding attractive, especially in the PSU pack, whether banks or, in the power pack, anything attractive there?
So PSUs have actually had a remarkable run over the last year, but I think it's been driven by a combination of different things. Firstly, you have seen a turnaround in operations, overall operational efficiency has improved. And importantly, across different segments that PSUs are operating in, the business environment has actually improved quite dramatically. Banks, say, for example, are a very good example of the same. Between 2010 to 2020, and especially 2016 to 2020, a lot of PSU banks were really struggling with very large NPA issues. They were struggling with growth. They were struggling with capital. Now, effectively, post 2021-22, with all of these asset quality problems being addressed, you're seeing a very strong turnaround, and you're seeing this turnaround across multiple different ratios. So you're seeing growth coming back. You're seeing credit quality come down. You are seeing operating leverage start to play through, and you are seeing an ROE improvement. Now, valuations which were very, very cheap have basically rebounded, but there is potentially still kind of space for that to grow. So I think that PSU banks are a space that is relatively attractive. At Valcreate, I think we are a little more comfortable with the higher quality PSU bank names. So SBI clearly something that is amongst the top weights. Now, apart from PSU banks, there are other interesting pockets as well. Defense is something which we believe is probably a decadal story that we're seeing. A very strong Make in India push, a very strong strategic rationale for the same. The big problem, however, in defense is that some of these orders tend to be extremely lumpy. So you need to be careful about the specific defense names that you're going after. We actually prefer someone like a Bharat Electronics, which has a much more diversified portfolio. If you're looking at companies like HAL, Mazgaon Dock, Bharat Dynamics, I think they tend to be very dependent on specific projects. And if those projects come through, things could be fine. Otherwise, not. These are the two spaces within PSUs that we are relatively more comfortable with. I think power, infra, there are certain other segments which are also interesting. But this is at least a space that we are focusing on.
Absolutely. Actually, one more point I want to talk about is in terms of OMCs, in the oil and gas space. Anything attractive that you find there as well? Because, we have seen that run-up coming in, whether you look at an HPCL, BPCL, IOCL, especially in the last few months, there's a sharp run-up there. So, anything that you find in terms of value over there?
So actually, this is a space that we historically not really liked too much. What you tend to see is performance, both business performance and kind of stock prices can be very volatile. One of the key problems in the OMC space is that if oil prices move up a lot, you suddenly get windfall taxes that sometimes come in. You have had, at least historically, not so much under the current government, but you've had caps in terms of marketing margins, etc. We really see OMCs as a space probably which you can trade in and out of. And currently we do understand there is momentum. But this is not really a space where we see as a longer term value creation space, especially if you're looking at the kind of the longer term underlying trends in terms of a shift towards renewables, shift towards EV, etc. So it's not really a space we are very positive on over the longer term. I think in the near term, there is some momentum that could potentially continue.
What are your thoughts on the hotels and the hospitality space? On the one hand, players like the leaders, I would say, like Indian Hotels have got re-rated, become multi-baggers already. But even now, when we speak to some of the latest companies hitting the markets, say Sammy Hotels for one, or APJ, the Surendra group, the park, one gets a sense that we are still, the cycle is not got exhausted itself. We get a view that demand is good, room addition is happening. Any of the broader market hotel stuff which you have looked at, Ashi?
So hotels is clearly a space which does look quite interesting, especially from a slightly longer term perspective. What you have seen kind of historically is the moment an economy crosses a certain amount of per capita income, and I think $2,000 is the global benchmark. You see very sharp rise in discretionary expenses, and travel and leisure is a very important component of that. So if you're looking at the kind of youth, and if you're looking at the younger populations and their propensity to travel, that is a lot higher. So effectively, as India continues to grow and as the consumer class gets more willing to spend, you are seeing clear momentum in kind of travel and leisure spends. I think the 2, 3 years that people were stuck in the house during COVID has actually just accelerated the need or the desire to actually go out and travel. So what we do kind of expect to see over the coming decade is a sustained rise in leisure travel demands. Overall, kind of even commercial travel is doing fairly well, and as the economy continues to do well, that part should also do very well. You're probably not seeing the same level of hotel room additions as the potential increase in demand. And if you just look at any hotel room penetration rates against any other emerging or developed markets, hotel rooms are clearly underpenetrated in India. So this should potentially lead to a fairly strong period of improved occupancies, higher prices, etc. And hotels being a fixed cost business, any incremental kind of revenues flows down very sharply down to profits. So you could see margin improve. So it looks like a very strong outlook for hotels overall.
Swan Energy has suddenly shot up further. The story which he broke, yes, at day's high, crossing the 750 mark. Nuresh, okay, this is also a new one. So I'll have to go back to Ashi. Ashi, Jana Small Finance Bank, have you looked at it? Because it's a recent IPO, but I was looking at the valuation. Even after IPO at 450, comes down to one-time price to book, forward price to book. Have you looked at it?
So we've not specifically looked at Jana, and we've had a cursory look, but not something very in-depth. But I think at a broad level, the ability of kind of small finance banks to really generate value, longer-term value, right? Longer-term value, longer-term ROEs, I don't think is yet very clearly proven. What you have seen is at least small finance banks that have been around for a certain amount of time, given the fact that sometimes they're lending to fairly concentrated segments, they can be quite high volatility in terms of their business operations. We haven't really seen, according to us at least, a small finance bank really prove the ability to compound over the longer term. So we have had a cursory look.
That's the word on Gujarat Fluoro. But Ashi, you were making a point on Jana Small Finance Bank as well. Talk to us about that, as well as in terms of anything interesting where everyone is talking about consumer staples. No one's interested that much in it, but anything that you're finding interesting in that pack as well.
Yeah, sure. So my apologies, there's some internet problem. Yeah, so in terms of Jana Financial Bank, I think the core point we were trying to make is that the whole small finance banking space and the ability for small finance banks to actually create long-term value creation for investors is not necessarily something that we've really seen until now. We've not yet seen a small finance bank really scale without kind of a certain amount of volatility that you're seeing in business operations. So it's not a space that we are very optimistic at. We'd like to see this whole banking license around SFBs, their business models evolve a bit more before taking more aggressive exposures out there. I'm sorry, what was your second question?
Consumer staples, that is also not much of an interest that anyone has there right now. But do you think that there is something that one could look at that is looking attractive in the consumer staple space?
So consumer staples is a space we're watching quite closely. I think what clearly the problem is that both rural consumption and in recent times, even urban consumption has kind of slowed down. So across the board, and you're seeing this in consumer staples, but you're also seeing this in other consumer segments, demand growth is actually quite weak. You probably want this to come back before you see some momentum. A key element around, I think, the market focus shifting away from consumer staples is pretty much over the last decade, you had a lot of these consumer companies, as consumer staples especially, re-rate quite significantly because of a lack of other investment options that were there. With a number of new emerging themes coming out, which are quite attractive from an investing perspective, real estate, capital goods, the whole PSU space, etc. A lot of market focus has shifted towards place where there is growth, and the problem at some level with consumer staples is while growth is not there, valuations are still no longer cheap. So you probably need growth to come back for these stocks to start to perform. Now, within consumer staples, there are certain relatively kind of interesting pockets. I think HUL has underperformed quite significantly, and probably for the first time in many, many years, you're seeing a company like a Godrej Consumer trade at a premium to an HUL. Britannia has recently just crossed them. So I think it is clearly a space interesting from a long-term value creation, but you do need growth to come back with this space to move.
One point I want to talk about is, in terms of when you talk about private banks versus PSUs. Private banks, obviously, we know that they have not done much in terms of a performance versus a PSU bank. What is it that you are looking at in terms of private versus PSU banks?
So it is actually quite interesting because leading private sector banks are all still growing. Valuations are not very expensive, but they have just been struggling to perform. The way we kind of look at it is historically you had two kind of bellwethers of the market, being HDFC Bank and Kotak Bank. Now, these were the private banks that would trade at the kind of larger premium valuations to the entire other pack. However, both of these banks have had specific issues that have impacted performance and stock performance over the past year. HDFC Bank is obviously struggling with the merger at the current time, and Kotak is actually seeing a transition away from Uday Kotak, a much beloved leader. These banks, according to us, have led to some kind of a ceiling in terms of valuations of other banks. So an ICICI Bank, basically, if you see, caught up to an HDFC Bank valuation and then really struggled to kind of move beyond that. You've subsequently seen an Axis and an IndusInd also starting to move. But if you have an HDFC Bank at about 2.2, 2.3 times, ICICI Bank is also now at similar valuations. In fact, it's recently just crossed an HDFC Bank. It really doesn't give too much room for other private banks to actually move up. So I think this kind of value premium compression that you're seeing is at some level causing some kind of a ceiling in terms of stock performance for some of the other private sector banks. And this at some level is where market momentum is kind of focusing or shifting a bit to other smaller kind of regional banks or PSUs, etc., where the valuation gap is still there.